Say the word. Say the word.
Alright, so of course, I also think that the Fed might take profits off their dollar shorts. So as we all know, dollar has been going down past few months, right, all the way. And usually, towards the end of the year, if you look at the past 2 years, I think I mentioned this before, the dollar tends to go down the first half of the year and recover in the second half. Partly because traders always expect, the December meeting is their last chance to raise rates, or the September meeting, right? So on that end, we might see traders who are positioned in the short side to cover their risk. And then of course the Fed was widely expected to start unwinding their QE program, right? All the hints about balance sheet normalization and all that, alright? And then of course we will want to look to Yellen dropping any hints for a tightening in December, alright? So pay attention to what they say, okay? And the tone of the language of the statements, because this will be very important going forward. Okay, my view is that this round they may not do anything. Okay, why? Because firstly, North Korea. Okay, and secondly, the US was just hit by 2 hurricanes. Right. So if you think about it from the central banker's point of view, okay, it might not be wise. I could be wrong, but it might not be wise to raise rates at such a time when you don't know the impact of the hurricane on the economy. Right? And even if you do know, it's probably going to be bad. Right. So given the current backdrop, you might not want to raise rates or do your balance sheet tightening at this point in time. Right? But you could drop hints about December. So that could probably be what's going to happen. At least that's what I think will happen.
So for this week, it's really about FOMC and Canadian. Okay, so I'll just quickly share with you how I look into them. Quick one on Euro Dollar. Okay, so I'll go through very briefly. So later, if you have some more detailed analysis, you share. Today is your day to share highlight. Okay, very quick one. If you look at Euro Dollar, okay, so because FOMC related to dollar, so the most common pair here to look at is Euro Dollar. Okay, you look at the most recent development. What is your bias? Based on just now what I shared, right? You either see a move like this that give you a bias, or you see a move like this and then you see a crawl down. Okay, so this one gives us a bias of downside. This one gives us a bias of upside. Okay, so in terms of Euro Dollar, which kind are you seeing? This one, this two. Which kind are you seeing? Two. As in, if you're looking at this overall chart, right, it's more of a 2, right? It's actually more of a 2, right? Because what you see here is a move up, right? It's a strong move up. And then now here is slowly slowing down. When it's slowing down, you realize that it's contracting. Can you see that? And if I pull in my RSI, most of the time you will see a very clear divergence, which means that price is losing momentum as it's going higher. So at one point in time, you actually expect this to come down. Okay, which can be your FOMC later on, which means dollar starts to strengthen. Alright, if I look into dollar index, it will be the inverse of Euro Dollar. Alright, so you will also see something very similar. Okay, because these two currencies, they are almost 100% inverse. So again, you can see this move here is crawling down. There's a lot of price overlapping each other, and you have your divergence. Alright, so again, this points to the higher probability that FOMC might see dollar strengthening.
Around the earth and around the sun, say the word and we can say Say the word.